Aziz, just backing off of what you just talked about in terms of the kind of companies you look to buy, can you walk us through Nordstrom and what you find fundamentally attractive about their business, given all the disruption that's taken place in retail?
Yeah. Nordstrom is a company that we have owned off and on, essentially, for 12 years. We've owned, this is one of the highest percentage position sizes that we've had, other than 2009, when we bought a lot of it. And we've had it to almost zero. Obviously, the company has changed a lot over time. But the thing that attracted my attention to it 10 or 11 years ago, when we first started buying it, is that it was a few years after the young Nordstrom cousins took over management. And they came out and they said, listen, we have our name on the door, and we want to preserve this business not for the next 5 years or 10 years, but we want to preserve it for decades. And we think that a lot is changing in retail. And this is all obvious now, but they were talking about this more than 10 years ago. And they said, what we're going to do is the following. We know that if we do not become an online leader in our business, we will die. And we also know that many of our competitors will not be willing to do what we are willing to do, because a lot of the necessary investments are going to flow through the income statement as opposed to the capex statement, which is usually historically what retailers used to do, because a lot of it is IT and fulfillment and hiring and things like that. But we don't care. We're going to spend the money, and it means that we're going to earn less money every single year than we would have for the next 10 years. But if we don't do it, we're going to die. And they were right. And they have spent enormous amounts of money building what I think is, if not the top, then certainly one of the top fashion retailers in North America. Their market share in online is an order of magnitude bigger than their market share offline. They have the biggest online business of anyone in their industry, and they're growing faster than anyone else. And they continue to invest, so we can think they continue to under-earn because of that. And more recently, when we increased our position in it a couple of years ago, we looked at it and the carnage that was the US retail industry, which to some degree continues to be the trend. And we looked at their brick and mortar business, and we looked at their online business. And Nordstrom very early on did something very smart, which people are just now catching on to, which is they did not have a separate online division in terms of management. What they did is that they split the business by full line and discount. And the reason they did that is that they argued, I think correctly, that from the point of view of the customer, customers don't care that they bought from Zara.com or Zara, the physical store. But Zara and others still to this day have silos between the two, which is why if you buy something online, you want to return it to a store, it's a nightmare. If you buy it from a store, you want to ship it back, it's a nightmare. They have separate warehouses, it's a total mess. That's how the rest of the industry did. What Nordstrom did very early on is they said, no, we're going to treat each one as a business. We don't want people in full line to be fighting whether the credit and the income gets booked in this division or this division. We're all in one boat. Let's run it that way. Let's make life easier for the customer, and we'll deal with the accounting and the background. It doesn't matter. It meant that very quickly the numbers that they were reporting for online and offline were essentially meaningless, because there was a lot of buying in store, return online, and vice versa, and all of that. But that doesn't matter. What matters is that from the customer's point of view, they have been able to reach more customers and make higher average selling prices and volume off of every customer that they reach in a period where everybody in retail was just suffering. And that type of long-term thinking, which they were able to do because they did have the family as an anchor investor, is what we look for. We want companies that are thinking 10, 20, 30, 40 years down the road, not companies that are thinking next year. And I think that attracted us a lot in terms of capital allocation. The size of the position now is a function of valuation. When we increased it 2 years ago and again this year, it was because we thought that the brick and mortar alone, if you chop it off and sell it, they won't. But if you did, is worth more than the price at that point in time. If you looked at the online alone, if you, again, chopped it off, it would be bad for the business. But if you did, it's worth a lot more. The discount business was worth almost the price of the stock. It was just, there's so many ways where this will not lose us money. And they had massive optionality on the upside. They continue to, and we think they continue to under-earn, and they continue to push the envelope in terms of experimentation and how they change the customer experience. So some of the things they've been doing recently, which again, other companies don't want to do because it hurts the stock price when they announce it. But things like Nordstrom Local, where they went and they built these boutiques everywhere, where you can go order something online, they'll ship it to a store that's not near you, but down the street from you. You can go try things on, keep what you want, and send it back. When things like, not click and collect, but actually click, send it to the, the Bellevue changing room in the men's area, and they tell you, go to changing room number 3, by the door. What time do you want? 3 p.m.? Go at 3 p.m. You're going to find the clothes hanging in there. Try them. Keep what you want. Leave the rest. All these things that they're changing and investing and experimenting with, really, in terms of pushing the boundaries of what it means to be a retailer tomorrow, I think are very important. Most of their competitors continue to think online, offline, and they think about what it means to them, not to the customer.